In the crypto world, understanding macroeconomic factors is often overlooked, but we offer a unique perspective on how macro trends influence our crypto investments. For us, macroeconomics serve as the critical framework for evaluating risk assets, particularly in the cryptocurrency space. Our approach involves using macro insights to guide our investment strategies and determine the best ways to express our views through digital assets. While technically we could trade a range of products like rates, FX, and other traditional assets on platforms such as the CME, our focus remains primarily on digital assets. The key advantage of this approach is that if we accurately gauge macroeconomic trends, we can effectively predict and capitalize on movements within the crypto market. This integrated perspective allows us to leverage our macro insights to make informed investment decisions in the crypto space, ensuring that our strategies align with broader economic conditions and market dynamics.
In the crypto world, a deep understanding of macroeconomic factors is often missing, but we bring a unique and differentiated approach to integrating macro insights with our crypto investments. For us, macroeconomics act as the essential framework for assessing risk assets, particularly within the cryptocurrency market. This perspective allows us to use macro trends to guide our investment strategies and determine the most effective ways to express our views through digital assets. Although we have the capability to trade various products such as interest rates, foreign exchange, and other traditional financial instruments on platforms like the CME, our primary focus remains on digital assets. This specialization is rooted in our belief that mastering macroeconomic trends enables us to make accurate predictions and informed decisions in the crypto market. The beauty of our approach lies in its simplicity. If we get the macroeconomic outlook right, we get the crypto investment right. By aligning our investment strategies with broader economic conditions and market dynamics, we ensure that our decisions are well-informed and strategically sound. This integrated approach allows us to leverage our macro insights to capitalize on opportunities within the cryptocurrency space, ultimately enhancing our ability to navigate and succeed in a rapidly evolving market.
Subscribe our channel and press the bell button to get our video notification. And like the video.
Momentum has been exceptionally strong this year, with the Nasdaq hitting new all-time highs even though it appears overbought. The breadth of this rally is not very robust, as major tech leaders like NVIDIA and Microsoft are driving most of the gains. For instance, NVIDIA is now approaching 20% of the XLC ETF, which serves as an alternative to the QQQ. Given the current momentum, it is challenging to adopt a bearish stance on the Nasdaq. While tactical strategies like buying put spreads or hedging positions could be considered, the relative size of crypto compared to the Nasdaq or global equities complicates matters. Although there have been instances where crypto has correlated with the Nasdaq, the small size of the crypto market often means it doesn't need to always move in tandem with broader equity indices. This discrepancy makes it difficult to directly correlate the two markets consistently.
Momentum in the market has been exceptionally strong this year, with the Nasdaq reaching new all-time highs, despite showing signs of being overbought. While the index itself is performing remarkably well, the breadth of this rally is somewhat narrow. Major tech leaders, such as NVIDIA and Microsoft, are spearheading the gains. For example, NVIDIA is approaching a 20% weighting in the XLC ETF, which serves as an alternative to the QQQQ. Given the current market dynamics, adopting a bearish outlook on the Nasdaq is challenging. While one could consider tactical strategies like buying put spreads or employing hedging techniques to mitigate potential risks, the relatively small size of the cryptocurrency market compared to the Nasdaq or global equities introduces complexity. Many investors attempt to correlate crypto movements with the Nasdaq, but this can be problematic. Although there have been periods when crypto has shown some correlation with the Nasdaq, the crypto market's smaller scale means that it does not always move in sync with broader equity indices. This makes it difficult to establish a consistent correlation between the two markets. As a result, while traditional equities and tech stocks may drive broader market trends, the cryptocurrency market's behavior often diverges, reflecting its unique characteristics and the need for a more nuanced approach to investment and risk management.
Institutional adoption of Bitcoin is now gaining significant momentum, particularly with the introduction of spot ETFs. This development is expected to accelerate, though we haven't yet seen Bitcoin spot ETFs being rolled out for 401ks retirement funds and similar investment vehicles. As these options become available, they will introduce a passive bid into the Bitcoin market. Given this backdrop, it's challenging to envision a scenario where Bitcoin experiences another 80% drawdown. While such a decline is theoretically possible, the tail risk seems relatively low given the current market dynamics. Additionally, regarding Layer 2 solutions, we have launched an early-stage Bitcoin DeFi venture fund. Dan Held, a Bitcoin OG with extensive experience and connections in the space, has recently joined our firm to help manage this fund. His deep commitment to Bitcoin and comprehensive knowledge make him a valuable addition as we navigate and invest in the evolving Bitcoin ecosystem.
Institutional adoption of Bitcoin has reached a significant milestone with the introduction of spot ETFs. This development is poised to accelerate the integration of Bitcoin into mainstream financial products. Although we haven't yet seen Bitcoin spot ETFs being rolled out for 401ks retirement funds and similar investment vehicles, these options are on the horizon. As they become available, they will likely create a passive bid into the Bitcoin market, further embedding Bitcoin into traditional investment portfolios. Given this institutional momentum, it's difficult to foresee another extreme drawdown of 80% in Bitcoin's value. While such a drastic decline is theoretically possible, the tail risk appears relatively low considering the increasing institutional interest and the gradual broadening of investment options. In the realm of Bitcoin's technological evolution, we are actively involved in early-stage investments through our Bitcoin DeFi venture fund. To enhance our efforts, Dan Held, a Bitcoin OG with deep expertise and an extensive network in the Bitcoin space, has recently joined our firm. Dan's long-standing commitment to Bitcoin and his comprehensive knowledge make him an invaluable asset as we navigate the rapidly evolving Bitcoin ecosystem and explore new opportunities within the space. His involvement strengthens our capabilities and positions us well for future developments in Bitcoin and decentralized finance.
Subscribe our channel and press the bell button to get our video notification. And like the video.